Thank you for joining me. Today I'm going to tell you what is an HSA and why is it the best retirement account ever. And the basics is it's not a retirement account, it's a health savings account, which means it works with your health insurance more or less. It's complicated, but you're only eligible to have an HSA if you're on a high deductible health plan, which has some restrictions, and it's obviously a US thing, so if you're from somewhere else, this is probably not for you. But if you have a high deductible health plan, which is pretty standard in the US, then you can open what's known as a health savings account, and you can contribute money pretty much like a 401k that comes directly out of your paycheck, and usually the company you work for actually matches that amount up to a certain amount. So it's pre-tax money, which means it comes out of your paycheck before you pay income taxes on it. And the money that your employer gives you to match that amount is also pre-tax money. So you don't pay any taxes on any of this money for a considerable amount of time. Now, the contribution limit is $3,500 per year if you're single, $7,000 per year if you have a family, and you can add an additional $1,000 if you're over the age of 55. So if you're 55 and married, filing jointly, you can contribute $8,000 a year pre-tax or tax-free. Now, everything you can take out is tax-free if it's for health-related expenses. That means anything for prescription medicine, health insurance, dental insurance, or dental costs, or glasses, contacts, whatever. All of that is before taxes and tax-free. So all the money you throw in there is completely tax-free for everything. Now, for all non-health related expenses, if you do withdraw money, there's a 20% penalty on top of your income tax. So if you need to pull money out of a health savings account, which you shouldn't be putting any money in there that you can't afford to just keep in there or use for health related expenses. And there's actually a different way to pull money out that's also tax-free. And the kind of hacky way to get around that restriction is to have a health savings account, throw all the money in there that you can, and then actually don't use that amount for health-related expenses. So you do pay everything in cash that you could use the HSA for, and you can reimburse yourself at a later date. The later date does not have to be this year or even next year. So reimbursing yourself, talk to a CPA about this, by the way, you can reimburse yourself years down the line if you keep the receipts and you can prove the health-related expenses. So the best way to use this is to throw money in there, invest that money into an index fund or whatever is available. I assume that there's not too many investment choices in whichever HSA you choose, but have that money grow, pay out of pocket for everything you can, and then later you reimburse yourself tax-free from that account. Now, if you're over 65, you only pay income tax on this account as if it were a 401k. So basically you contribute until you're 65, and then all the money that you pay yourself for retirement, you only have to pay income tax. You don't have to pay a penalty or anything. And health-related expenses are always going to be tax-free, which means if you're over 65 years old and you have to pay for dental or for prescriptions or anything, all that money is still tax-free. It's only if you need to have cash in distributions from the HSA after you're 65 that you pay income tax on the amount. So hit the subscribe button if you want stock market videos. I'm posting every day before market open. Have a good day.